Welcome to Manage Your Money. I'm Brian McKinley of Investors Group, and today's topic is family money, a financial checklist for families. Raising children is definitely a joy, but it's also expensive. And while parents are great at keeping track of schedules, appointments, and making lists that keep their lives in order, financial planning can be often forgotten in the rush and hustle of everyday life. But it's important to have a financial plan in place if parents are to successfully navigate the different stages of their children's lives. So here's a quick reference financial checklist for families. First, pre-baby. Research all available employee and government parental benefits so you'll know what your income is likely to be while you're away from work. Review your current financial plans and determine what you want to save in advance of having a child and what your family budget will be when your new addition arrives. Save early and often in a tax-efficient way. Use RSPs and tax-free savings accounts to build a nest egg. Investigate life, disability, and critical illness insurance. Arrange for a last will and testament or update your most recent will to be sure it includes your wishes for your children as related to education, care, and inheritance. Name a guardian for minor children in the event of your death. Now let's talk about infants and toddlers up to age 5. Register your children for all government benefits. Open an RESP. The government offers a Canadian Education Savings Grant which can provide 20% or more return on the money you save depending on your income. Now let's talk about the early years, up to age 10. Why not open a savings account for your child? Save the receipts from daycare and extracurricular programs because they may be eligible for the child care expense deduction. Revisit your financial plan and anticipate future costs to be sure you're saving and investing enough to meet your goals. Adolescent and teenage years, ages 11 to 19. Talk to your kids about earning, saving, and spending wisely. If they have a part-time job, help them to divide their income into areas like current cost of living, future school savings, and investments. Teach them about loans and good and bad forms of debt. Set goals with them and add incentives like matching their savings. Then into the young adult years, up to age 25. Why not offer to contribute towards the purchase of their first home if they are able to save a certain amount of their own money? Talk with them about savings plans like tax-free savings accounts and RSPs. Be sure they understand all the tax deductions and credits available to them through RSP contributions, their educational expenses, and so on. Encourage them to work with a professional to file proper tax returns. Include them in conversations about estate planning and where to find your will and other valuable information. Life can bring joy and happiness along with change and challenges. Your professional advisor can help you navigate every stage by providing the personal financial knowledge you need and the right financial plan for your family. Thank you for joining me on Manage Your Money. This and earlier episodes can be found by searching Brian McKinley Manage Your Money on Google or YouTube. See you next time.
Manage Your Money is brought to you by Brian McKinley of Investors Group. Life is rich and varied. Your financial plan should be too. Visit brianmckinley.ca today.